Savings was 724.603 billion naira. From the total distributable revenue, the federal government received a total sum of 758.405 billion naira, and the state government received 689.120 billion naira, while the LGCs received 505.803 billion naira, while a sum of 141.359 billion naira was shared to the benefiting states as derivation revenue. Well, the chairman of the Presidential Fiscal Policy and Tax Reforms Committee, Taiwo Oyedele, is calling on Nigeria's business community to remain open-minded and seek informed analysis on the revised capital gains tax framework as the new tax law takes effect in January 2026. Mr. Oyedele made the appeal while speaking at a lecture series organized by the Capital Market Academics of Nigeria, where he delivered a presentation on Nigeria's Tax Act 2025 and the Nigerian Capital Market Focus on CGT. He explained that the new progressive CGT regime is crafted to promote fiscal and equity and is ultimately more investor-friendly than perceived and cautioned stakeholders against reacting to misinformation or early market panic. Meanwhile, stakeholders have continued to raise concerns on the implementation of the new tax law ahead of January takeoff. To look at this and more is an economist and tax manager at PricewaterhouseCoopers, Abiodun Kayode Ali. Thank you so much for joining us at this point.
And thank you for having me.
All right, so let's give some perspective to this issue. Can you explain the key changes introduced by the new tax laws, particularly the Nigeria Tax Act 2025?
Yes, thank you. So the new tax law is basically designed to revamp what we have currently. And so let me just give a bit of a background. So the current tax laws that we are running, they've been in existence for quite some time now, right? For quite a long time. And there's been several attempts to make progressive updates. Now, because these updates comes in bits and pieces, they are definitely not going to solve most of the underlying issues we have, such as simplifying these laws and the likes, right? So the purpose of the NTA, the Nigerian Tax Act 2025, is to totally overhaul the tax laws that we have. So part of the problems that we have has to do with duplicity. Another problem has to do with some of these laws not being clear, leading to ambiguity. I think that's even the right word, ambiguity, and leading to lots of disputes between the tax authorities and the taxpayers. So these new tax laws are meant to simplify them. And to answer your question directly, part of the changes we have has to do with the exemption of companies from paying taxes once they meet a high threshold of about 50 million naira. We also have a situation whereby individuals themselves, they don't pay taxes if they have a taxable annual income of a million in a year, right? And there are lots of reductions in tax payable, especially for individuals earning 20 million and below, right? And so many other things we have in there, right? I can go on and on, right? Depending on how much time I have to answer this. So those are some of the changes we have. Then some other changes we have to do with the ease of administration, how taxes are being collected via a digital platform, right? An e-invoicing platform where the tax authorities are able to see clearly what are the turnovers of businesses so that there is no form of deception anywhere, all right? And over time, it's expected that compliance will be easier. So these are some of the changes that we can see in the tax laws.
All right, so we'll talk about all of those other aspects in the course of this program. But my question, one of my questions will be, how will the implementation of these tax laws impact taxpayers, businesses, and the economy, particularly small businesses?
Yeah, and that's a very good one. If you look at it from a small business perspective, I already mentioned that if you have formalized small businesses, the threshold for which they will be exempted from taxes has actually increased. Currently, we have it at 25 million. The 25 million exemption threshold came into existence in 2020. And back then the exchange rate was probably maybe 300 naira to the dollar. Okay, but currently the exchange rate is 8,400, right, to the dollar. So this exemption threshold, which was 25 million, has been raised to 50 million, 100 million, right? So this kind of provides that kind of buffer for small businesses, right? Then again, you have a situation where small businesses would also not be required to register for value-added tax. They would also not be required to file value-added tax returns or include it in their invoices. Okay. Then you also have lots of incentives, such as their income. You don't have to withhold from the income of small businesses, right? So you have these sorts of benefits available to them. Then one more thing I must say is that there are some essential items, basic items like food, like transportation, like education, medicine, the things that impact on human capital development. Most of these items, they had their VAT being exempted under the current law. And when I say the VAT is exempted, it simply means that when you purchase these items, you won't see VAT on them. But there is a small problem. The small problem is that the producers, the suppliers of these items, they incurred VAT when they were producing these items. So because they can't put VAT on the final product, which the consumer will consume, what they then do is that it's implicit. They put it as the cost of production, which is somewhere sitting in the final price you pay. What has now been done in this new tax law is to make it zero rated. What that simply means is that the consumer will see that VAT on these items is zero. No VAT on these items, or you can call it zero. But the producer, the supplier who incurred input VAT at the point of producing these items can get a refund from the government. So he doesn't need to put it as an implicit form in the final price of the product. So this will simply mean that the product will become cheaper, okay? That's one other thing that has been done from a small business perspective or from an individual's perspective, okay? So these are some of the things that we can see in the new tax laws.
So overall, now small businesses will also benefit the more.
That is absolutely correct. That is absolutely correct. So the idea is to incentivize small businesses, encourage them to formalize, and also to give them that buffer, right? Whenever they are doing businesses, save them from a lot of troubles, right? And give the bigger companies the troubles to take on, right? I can put it that way.
Yeah. Okay. So, but where does this put the consumer? Because the new tax law has increased CGT from 10% to 30% for corporate entities, and it seems like it might investors, or do you think that investors will be affected? And of course, how will the capital markets be affected in all of this?
Okay, yeah, and thank you very much for that question. The CGT is actually a very interesting one. So let me start by saying CGT is capital gains tax for those who are listening to the show and don't know what it is. So it occurs anytime you dispose of some assets, okay? Some assets that are chargeable to capital gains tax. So let me speak of it from an individual perspective, then come to the corporate perspective. So from an individual perspective, there are some items that you will dispose of and you won't even pay CGT. So one of those items has to do with your land, for instance, your land, your building.
Your landed property, your house, your car.
Yes, you enjoy, yes. So for the landed property, you enjoy an exemption, a once-in-a-lifetime exemption. The first time you dispose, you won't have to pay it, okay? Then for your cars, for instance, you can dispose cars 2 times a year without paying CGT. All right, so you can dispose cars twice a year and you won't have to pay CGT. If you are going on your third disposal, yes, you would have to pay CGT. And the way it works for an individual is that it's going to take the rate of the tax band that you fall under. So let me try and simplify that. As an individual, there are certain bands you would fall under on an annual basis. So if you fall under the first band of 800,000 naira per annum, no tax at all, okay? Then if you get to a band of 2.2 million after the 800,000, you would pay a tax at a rate of 15%. So depending on what band your total income falls under, that is the rate it would take. So if your tax band at the end of the year is within the band of 2.2 million, taxable at 15%, your CGT as an individual will be taxable at 15%, okay? That's the way it works. Now, for the corporate, because the corporate income tax rate is 30%, that is the reason why the CGT rate is also 30%, because they want to ensure that the corporate income tax and the capital gains tax are the same rate. The idea behind this is to avoid some mechanisms, some avoidance mechanisms, right? That's the idea behind it. Like you rightly said, for those who are investing in the stock market, right? For the stock market, there are some certain thresholds under which you won't pay CGT. The first threshold is that if you are disposing of an asset, shares, and the total proceeds in a year, within a 12-month period, is 150 million and below, you will not have to pay CGT. 150 million and below in a year, you won't have to pay CGT at all. Okay, and you can see that most individuals would not attain this threshold in a year. I'm sure you would agree with me. Okay. Then the next, I wanted to say the next thing. Then the next thing that we also have is a situation whereby you then reinvest the proceeds in a Nigerian company. If you reinvest it in a Nigerian company, you also will not be taxable, okay? It's when you don't do all this that you will then pay tax, right? So the government has currently put in some measures. I saw in a document recently that the committee have brought in some measures to kind of save the base, right? The base of those who are investing in the capital market and are exceeding this threshold. So there's been measures to kind of ameliorate whatever pains might occur as a result of this.
Right. Okay, so let's go to what you said earlier about taxes on land properties, vehicles and all of that. You mentioned that someone could have to sell his car twice before he gets to be taxed. What about car dealers? How do you think this will affect them?
Okay, so for car dealers, right, the car dealership own is quite different. It's quite separate. So this then brings me to a concept of what is called, a sale that you would make as a business for you, what is in your ordinary course of business, right? It's quite different from the sale you would make as a one-off transaction, okay? So where your duty is to sell cars, right, or where your business is to sell cars, you would pay tax on the profits normally, right? Okay. You would pay tax on the profits. You won't see it as a one-off chargeable gain.
Yeah, but don't you think it might increase the price of vehicles in Nigeria?
No, that won't in any way increase the price of the vehicles, because this tax we're talking about is income tax, is the income of the individuals that is being taxed. What could typically impact on the price being paid by the consumer is what is called a consumption tax. And the VAT is an example of a consumption tax. So it is when you see an instance where there is an increase in VAT rate without a corresponding allowance to take a credit that's where you can then have a spike in the price of vehicles. So the difference is that one is a consumption tax, is the tax you pay as a result of purchasing a particular asset. The other is the tax you pay from the income you make selling those items. They are two separate things.
Okay. So in all of this, how do you see the new tax laws contributing to Nigeria's economic growth and development?
Yeah, and thank you very much. That's a very good question you've asked, right? What I would say is that if you look at it holistically, it seems like this tax law has given that platform to make doing business in Nigeria easier than what we have. Like I said at the start, in terms of simplifying and making things clearer, it kind of makes investors, it makes businessmen know what to expect. They are not confused, right? Then also, if you look at it from the perspective of the low income earners, right? Low income earners, a lot of the times they experience what they call multiplicity of taxes, multiple taxation, right? And they probably don't even have the wherewithal, the resources to hire consultants like myself to get them out of any troublesome situation they find themselves. Sometimes you see all these people getting a kind of tax that has not been heard of by one local government player or someone, a non-state actor, giving them these taxes. The new tax law has created a provision whereby there is an individual they could go and meet who is being paid by the government, who can explain these taxes for them and can also defend them whenever they get some assessments that is unjustifiable. Okay, so these are some of the things that the new tax law does. One more thing I must say from a company income tax perspective is that there is even a provision to lower the corporate income tax rate from the current 30% to 25%, simply by the president issuing an order. Right, so there are so many benefits that we can list on. I was talking about VAT, and I told you about how
Go on.
Has now been reduced. Okay, so I was telling you about how VAT has now been modified in such a way that the end cost has been reduced. Okay, when I say the end cost, meaning that most of those items that were previously exempt are now zero rated, and the goal behind this is to ensure that the producers, the suppliers, can be able to recoup the VAT cost they have incurred, so they don't have to pass it on to the consumer. So all this in the long run is actually making business easier to do, right? And finally, in terms of e-invoicing, in terms of compliance, the idea is just to ensure that there is transparency and compliance is easy. You hardly have lots of non-state actors in the middle where there are leakages, right, in the process of compliance or in the process of collection, right? So the idea is just to build up trust in the system. I do know that it's not easy to adapt to change, but change might be painful, but as long as it is developmental and there is an end in mind that leads to the progress of the nation, I think it's something we can adopt with time.
Okay, so you mentioned something about technology, some form of technology that can be used. Now, what role will technology play in enhancing tax compliance and revenue collection?
Yeah, and that's a very good question you've asked. So given the fact that we're in the digital age, we're talking about we're in 2025 going to 2026, where we see lots of transactions being carried out by individuals outside the country without necessarily having a physical structure in the country, right? It just tells you the space at which technology is moving at an alarming pace. Okay, so what the technology is meant to do is to ensure transparency. Transparency is one thing it's meant to do, whereby you can see in real time the transactions being carried out by an individual. You can even see credits that you can take advantage of. You can see all these things real time. Compliance is made easier, is made simpler, and there is a provision that even makes the Nigeria Revenue Service, gives them the opportunity, the platform, to be able to collaborate with the state's internal revenue service, right? Develop themselves, right? Learn from each other. That way, it makes compliance easier and it reduces leakages across the system, where you have few individuals few personnel who are actually dealing with the aspect of tax collection. So in the long run, this technology actually makes compliance easier, and it makes collection more efficient for the government. So it's a win-win for both the tax authorities, for the government, and also for the taxpayers in the long run. And it's in line with what is going on in international best practices.
Okay, so we're having this discussion because this tax law will be implemented from January the 1st, 2026, and we're assuming that Nigerians need to understand this better. How will taxpayers be supported in understanding and in adhering to the new tax regulations?
And that's a very good question you've asked, right? That's a very good question you've asked. So I do know that the committee behind the tax laws, they've done lots of, you've seen Mr. Taiwo Oyedele on different platforms, try to speak and try to explain this. And I'm also doing my own bit, in my own contribution, trying to explain this on your platform. All right. So I think to a large extent, we need to get more tax experts who are able to speak to this subject and demystify most of the theories that are being passed on social media, especially the ones with interesting and sensational headline captions. So I think that's one thing we need to do as tax experts and professionals. Then I think taxpayers also need to try and do their part by getting a copy of these documents and trying to read it. And anytime they have questions, they could always send emails, social media communications to the committee. They could also send it to the tax authorities, the Nigeria Revenue Service, and they could send it to professional organizations like my institution, right? So it's very important that people lay a hand on those documents and read for themselves. Then I do know that there are programs in place to try and translate the laws to different languages, right? So the very important thing I would say is that ignorance of the law is not an excuse. So there is a huge part at the end of the day that lies with the taxpayer trying to lay his hand on information. Then I think we can also use this avenue, this opportunity to also encourage the tax authorities to also do their bit in trying to create more programs, more programs, right, to enlighten and break it down in a simple manner for the average man on the street. I think some of these ideas would come in handy in preparing us for 2026, which is just like in a month and 10 days time.
All right, so in what ways do you think this government is engaging with stakeholders? Do you think the government is actually engaging effectively with stakeholders to ensure a smooth transition to the new tax regime?
Yes, I would say the government is doing its best, but like they say, the largest room we have is the room for improvement. All right, so I think there is actually a large place. There's plenty more they can do. I would say that. And when I say there's plenty more they can do, I'm looking at things from the aspect of what they call clarification guidelines. Okay. So what does that mean? Every time a law is being introduced, it's expected that the administrators, in this case, the Nigeria Revenue Service, would come up with guidelines to show how they would implement, how they would administer it. Okay, so I would expect that by now we should be seeing those clarification guidelines. We're yet to see them, but it would be useful to see how they are going to implement those the letters of the law. Okay, so that there is no ambiguity, right? So I think they need to do more from that perspective. Then I do think that we need to see more, especially on the social media. But in all honesty, like I said earlier, I think this government is doing quite a lot. I'm sure you've seen some communications regarding essay writing for journalists, right? Whereby there are prize awards that are going to be given for journalists who come up with a very objective message on exactly what the committee is doing on the new tax laws, right? And there are also different promotional, apart from that for journalists, we have different promotional efforts for students as well, whereby they're encouraging students to also read it and write on it and also stand a chance of winning, right? And there's also that for professionals, those who want to kind of be I'm thinking of the right word, who want to be ambassadors, right? Where they will be trained and they will go about circulating this. I think if I'm to compare this with other projects being done by governments in terms of new laws, I think they've done well, but they shouldn't rest on their oars. There's always room for improvement.
All right. So are there opportunities for stakeholders to provide feedback on the implementation of the new tax laws? Will there be that opportunities for stakeholders?
Yes. There is always that opportunity. I do know that the chairman of the committee has always stated that feedback is welcome, and I know they're always open to feedback. The question we'll then ask is how soon would they then implement such feedback? Because the laws have been passed, and before an amendment is going to be made, you might need to go through the entire legislative process again, right? But regardless, I think there are ways to implement these things in such a way that they give it an accelerated hearing, even during the legislative process. But yes, the committee and the chairman has himself said that they are always open to feedback. And the most important thing is that because I personally I know him from previous work we've done before. He likes working with data, right? So one thing he has always encouraged is that you come with data and you present your feedback, your objective feedback. And yes, I do believe that they are open to taking most of these things and implementing them. Yeah, those are my thoughts.
All right, now, Taiwo Oyedele, Economics and Tax Manager at PricewaterhouseCoopers. Thank you so much for talking to us.
Yeah, thank you for having me.